We do want to take you without further delay to Liberty National Golf Course. Eric Schatzker is standing there right now with Barclays President Bob Diamond. Eric?
Thank you, Deirdre. Bob Diamond isn't just the president of Barclays, he's also the CEO of Barclays Capital. Bob, it is great to see you again. I think it was just about 6 weeks ago that we spoke about that transformational deal where Barclays is selling Barclays Global's investors to BlackRock. Now, I have to take care of some business before we get down to our conversation, because look at you, you're nice and casual. Here I am, all dressed up in a suit. I'm going to take off my tie so that we can actually have a comfortable conversation and get down to business without any hindrance here, don't you think?
I like your move. Good move.
There we go. All right, so I don't think I can match you for the color of your shirt, but I'll do my best with my questions. Let's start with the hot topic on Wall Street. It's the hot topic in the City of London. It's the hot topic throughout the world right now in the world of banking: bonuses. I'm sure you're tired of this conversation, but we really do need to know. We've got the U.S. Payzar. We've got Alistair Darling in the U.K. talking about setting independent rules over there for banker bonuses. We've got Nicolas Sarkozy saying the French government isn't going to do business with banks that don't toe the French line on bonuses. Where's all this going?
Well, you're right. It's a highly charged topic right now, compensation, I'd say, more broadly. I think, our principles have always been pay for performance, not pay for failure. Our principles have always been a mixture of deferred with cash, a mixture of equity with cash. And I think, to be quite frank, we welcome the regulatory conversation that's going on. I think if you put it in a broad framework, if out of this debate and we come out with very strong principles around pay for performance, not pay for failure.
Principles are good, of course, but we do hear these anecdotal examples of Citigroup, even Bank of America. They're still under government assistance, handing out big contracts with high guaranteed minimums. How's that possible in an environment like this?
I think the reality is that while compensation is important to debate and it's important that we resolve the principles, there's a lot of reasons why individuals decide to join certain firms. Compensation is part of that. I truly do believe at Barclays and at Barclays Capital, for example, it's the opportunity, it's the culture. There's a lot of things that go along with why people want to be a part of what we're doing, not just compensation.
Oh, no question, no question. I'm more interested in sort of the general tone of compensation, the tone of the debate, what it feels like from the standpoint of somebody who needs to hire good people. Where are you hiring right now?
Well, as you know, I think one of the things that has worked well for us is we're very clear as 2009 began of what we needed to do in terms of hiring. And it was really around filling out our equity and advisory businesses that came with the Lehman acquisition in the U.S., where we needed to fill out in Europe and Asia. So on the year, we're actually down about 1,000 people in headcount because there's many businesses where we found an opportunity to become more efficient with less business in those areas. But we have hired 2,000 people already this year in the areas I just mentioned. I think what's fortunate is we got out early in the year before many other people were hiring, and most of our hiring was done before mid-year this year. So probably a little bit more in the second half of this year and a little bit more into next year, but by and large, the platform in equities and advisory that we're looking to fill out across Europe and across Asia is probably 75 to 80% complete.
And is there a new battleground? Is there a new business that you feel you have to staff up in looking forward to 2010? Because I know you're doing your budgets now just like everybody else.
Yeah. Nothing new in that sense. I think if we can step back and say that priority is pretty much complete, what are the next priorities? Probably the most exciting priority for us would be to continue to grow and expand in our emerging markets businesses.
How about leveraged lending? That's a business we haven't heard much about for quite some time, but some deals are beginning to be done these days. What's Barclays' appetite for that kind of risk right now?
Well, I think the business will be here. Leveraged lending will be here, but the kind of lending, the kind of business that we saw, the kind of environment we saw in 2006 and 2007 with the change in covenants, with the increased leverage is not coming back.
We're not going back there.
No, it's going to be much more strategic, much more relationship.
Where does your tolerance end? Where do you set sort of the mercy point and say, I'm not interested in a deal like that?
Oh, I think it's hard to say in general. But one thing I would say, Eric, and I think we're seeing more and more of it every day, is strategic relationships between banks like Barclays Capital and the private equity firms are more and more important. I think I think the strategic nature of the relationship, and banks are doing business with fewer partners, and the partners are doing business with fewer banks.
So there's an incentive there. Bob, hang on for just a couple of minutes. We're going to be back with Bob Diamond, CEO of Barclays Capital, president of Barclays. We are here at the Barclays. It's a golf tournament that the bank sponsors this year at Liberty National in Jersey City, New Jersey. It's right across the Hudson River from Manhattan. It's great to have Bob Diamond here. We're going to be talking about other things. We've covered the subject of pay, want to talk about the economy, want to talk about the prospects for perhaps what the Federal Reserve might do and what Barclays is doing as a result. Stay with us. You're watching Bloomberg Television. We're talking to Bob Diamond of Barclays, and we're back in just 2 minutes' time. I am here in Jersey City at the Liberty National Golf Course with Barclays President, Barclays Capital CEO Bob Diamond, ahead of today's PGA event, the Barclays, sponsored, of course, by Barclays. Right, Bob? Let's talk for a moment about the economy. Just yesterday, we had some, call it, encouraging signs, better than expected data on the housing front, a monthly increase in home prices in June, better than expected data on durable goods orders, but some people remain concerned that the economy isn't yet on solid footing. Your view, what's the risk of a double-dip recession?
Well, let's kind of step back for a second and say what's happened in 2009 so far. I think we were all pleasantly surprised with the quality and speed of the recovery in China. It was early in 2009, well ahead of the time I think anyone expected. It had a positive impact on the stronger economies in Asia immediately. Secondly, I think certainly we were surprised, and we were one of the first to give Larry Cantor and his team credit. In March, they came out with their paper on green shoots in the U.S. economy and the expectation that the third quarter would see recovery. And we saw France and Germany in May with a good boost in industrial production, and it looks like now maybe 3% kind of growth in the third quarter. I think in terms of the U.S., which has been a bit behind, we think when we look back on the third quarter figures, we'll see June or July is the month when positive economic growth
consensus seems to be forming there.
It's beginning to.
But
yeah.
What about the idea sponsored, say, by Mohammed El-Arian that we're looking at a new normal of 2% growth? Do you buy into that idea?
Well, I haven't followed closely enough to comment on